Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a special guest for you. We're going to be welcoming Jared Dillian. He's an author, educator, and financial expert, and we wanted to welcome him on the show to give us an update on his market outlook, specifically as it relates to Bitcoin. Now before we get into that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you've heard of Jared Dillian's work before, what your thoughts are on the current market conditions, and your outlook for Bitcoin moving into next year's halving event. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got a really special guest for you, Jared Dillian. He's an author, educator, and financial expert, and we wanted to welcome him onto the channel to talk about what he's seeing in the macro environment here and his outlook on the financial market. So Jared, thanks so much for being with us today.
Yeah, thanks for having me.
You bet, you bet. I know you've got a lot going on. I was just saying off camera there, you've had a long history in the financial markets. You worked at Lehman Brothers. You were down there during the 9/11 situation and trading the following days, which must have been terrifying for you guys. So I want to draw on a lot of that. But before we get into it, can you give us a background on who you are, what you're about, and how you kind of got into this line of work?
Yeah, so I used to be in the Coast Guard. I was a lieutenant in the Coast Guard, and I went to business school. I got out, spent a couple years on the floor of the P-Coast Options Exchange, and then I went to Lehman Brothers, worked at Lehman from 2001 to 2008. I did index arbitrage, and I was head of ETF trading. And then at the bankruptcy, I decided to start a financial newsletter. I started the DailyDirtNap in 2008. I've been doing that for 15 years. I've written a bunch of books. Street Freak came out in 2011. Had a novel, All the Evil of This World, come out in 2016. Had an essay collection, Those Bastards, come out in April. And my new book, it's called No Worries, How to Live a Stress-Free Financial Life, comes out January 23rd. It's available for pre-order now. So I highly recommend getting a copy. And I also, so I have a undergraduate degree in math. I have an MBA in finance, and I recently finished a master's in fine arts in creative writing.
Amazing. So a very well-rounded education and a lot of life experience. And I wanted to actually pick your brain a little bit about your book that's coming out here. What does living a stress-free financial life mean to you? I saw some of the kind of quotes or notes about the book, and it was talking about making the big decisions correctly so you don't have to really worry about all the small, are you going to Starbucks, are you saving your pennies here and there type of thing. What does that really mean to you?
A lot of it's about that. The personal finance is an industry. There's some big names like Susie Orman and Dave Ramsey, but there's thousands of personal finance bloggers and YouTubers and stuff like that. And they all basically say the same thing. I mean, they say that you have to watch your expenses and you shouldn't buy coffee at Starbucks, and, you have to eat the generic canned soup, and, and basically what they're saying is that it's the culmination of a million small things that determine whether you have money, which actually isn't the case. That's not the case at all. It's just a few big things. So to put this in perspective, I get a coffee from Dunkin' Donuts every day. I get a nice coffee in the morning on my way into work, and it costs $3.70. Okay. So if I do that 250 days a year, that's $900 a year. If I give up coffee for 40 years, that's $36,000. And if I invest it in index funds, which return 10%, then I have like $150,000, $200,000, right? So the math actually checks out, like that's true. Like if you saved $3.70 a day for 40 years, you would have $150,000 at retirement, but you'll be miserable. You'll be absolutely miserable, right? And any program that asks you to give up a small daily luxury is not going to work, right? And if you think about it, like if you get a house that costs $100,000 more, you will spend $120,000 in interest over the life of that mortgage. $120,000 more in interest over the life of the mortgage, which is like 4 lifetimes of coffee, right? So people are obsessively focused on the little things, like just the stuff that does not matter. And the big things they kind of sleepwalk through. They don't really think about it at all. And the big things are buying a house, buying a car, and student loans. Like those are the three big things. If you get those three things right, then you don't have to worry about the little things at all.
Yeah, I really like your stance on that. And you're right. If you take all the enjoyment and the small perks out of your daily life, it really does lead for a kind of a dreary go at it. So I really like your approach there. I saw the student loan thing. I saw the housing thing. Aside from those three, was there anything else you're really educating people to make sure they get right on?
Well, there is one other thing, and I left it out of the book. My editor actually told me to leave it out because he thought it would make people mad. But it's also how many kids you have, right? Like if you have 5 kids, I mean, it's just math. Like the average child takes $250,000 to raise. So if you're spending 1.25 million on kids and you're not investing it and it's not compounding, then sure, like you're going to have a lot less money at the end. So nobody, my editor took it out because nobody wants to hear that, right? But that actually is a big thing. Now, I don't have any kids. I have 7 cats, right? And the cats are expensive as it is. I just paid for surgery for one of my cats. It cost like $10,000. But yeah, I mean, the kids are a big one. If you have 3, 4, 5 kids, like it's tough to save money.
Yeah, I can definitely see that. I have 2 kids, and I find it's tough to afford groceries and formula and all the rest of it. No pets though, no cats for me. So at least I'm ahead there. Now, the other thing I wanted to ask you about, I saw a really interesting tweet from you come out, I think, yesterday. So as an educator and someone who's passionate about finance, you had noted that there was something that happened in 1971 in the States, and since then we've really seen purchasing power of the U.S. dollar diminish. So, can you give us an update on what did happen for those of us who are unaware, and what do you think is going to be kind of the resolution of this disconnect we're seeing between purchasing power, inflation, and people just unable to afford day-to-day life?
Well, the chart that I was commenting on was a chart that showed the relationship between worker productivity and worker wages. Okay. So up until 1971, there was a 1-to-1 relationship. Worker productivity and worker wages were about equal. And then after 1971, they diverged. Worker productivity went way up and wages only went up a little bit. And, I commented on a tweet. I said, what happened in 1971? And the funny thing is that there's actually a website called WTF happened in 1971, and it shows a series of charts where all these divergences started to happen and things started to get worse around 1971. So what happened? Well, what happened was we effectively went off the gold standard. Like President Richard Nixon suspended convertibility into gold. It used to be, I think it was $32 or $35 per ounce of gold. And he suspended convertibility. And we went from really what was a gold standard to a fiat money system, right? And, people love to argue about this. Like people got in big fights in the replies on that tweet as to whether, the gold standard was responsible for it or whatever. Like under a gold standard, you don't really have a lot of flexibility. You don't have a central bank that like manages liquidity in the economy. And so therefore you typically have more recessions and they're sharper. Under a fiat money standard, we prolong the business cycle. We have a very long business cycle. It can last 10 years, but it's punctuated by a financial crisis. So you can argue about which one's better or which one's worse. But what's funny is this was a couple of years ago when Jack Dorsey was CEO of Twitter. He actually tweeted out that website, the WTF happened in 1971. So like people know about this. Like people know that everything changed once we went off the gold standard.
Yeah, we've covered that a lot on the channel. The Bitcoin Standard is a book that I've read and encourage people to read, and talking about the relationship of Bitcoin with fiat currency and the gold standard. So I did want to pick your brain a bit there, but you mentioned central bank, Jared, and I know you've been following Argentina closely. There was a big election there, I think a week ago or 2 weeks ago, and the new president is saying they're getting rid of the central bank altogether and pursuing options such as Bitcoin. What's your take on that?
Well, I've been, like you said, I've been following it pretty closely. I have investments in Argentina that have done pretty well as a result of that. Um, Javier Milei is an anarcho-capitalist. He's further right than a libertarian. He's an extreme capitalist, like a pure capitalist. And the central bank of Argentina was basically monetizing the debt and printing money to pay for welfare benefits, which is why they have inflation of 140%. Things have been so miserable there. So he wants to abolish the central bank. And he likes Bitcoin, but really what he's trying to do is dollarization. He wants to eliminate the peso and just use the US dollar and sort of piggyback off of US dollar monetary policy. So, that's not as good as it's not as much of a hard money standard as Bitcoin or gold. The dollar has flaws and US monetary policy has flaws, but it's a lot better than Argentine monetary policy. Let's put it that way. So he's basically trading 140% inflation rate to a 3% inflation rate, which I think you would do that all day long. And I think it's fairly easy to implement. Like Argentina, people in Argentina have been using dollars for years. Like they don't trust the peso. Like every Argentine in their ceiling has a shoebox full of $100 bills that they use as a store of value. Like they generally don't use gold, they use US dollars. So people have dollars. Like they have the ability to dollarize the economy.
Gotcha. Yeah, it's super interesting. As you mentioned, you've got some investments there. A lot of the lithium mining companies we cover on the channel are based in Argentina, and even a few of the Bitcoin miners I cover as well. So really interesting developments there. Now, I know you don't speak or write a lot about Bitcoin and cryptocurrency specifically, but what is your take on Bitcoin as a hard money?
I don't know that I really have an opinion. I mean, I do have an opinion, but I don't know if it's an informed opinion. Um, I owned Bitcoin for a little while from 2019 to 2021. It was a trade. I've never been a Bitcoin maximalist or a Bitcoin believer. I thought it would go up and it went up and I sold it, and that was basically my experience in Bitcoin. Um, I don't know. I don't know that Bitcoin or any other cryptocurrency will ever replace fiat currencies fully. You know, um, there's actually there's been some attempts to eliminate paper currency, like actual physical currency, and it hasn't worked out so well. Like Sweden tried this, I want to say about 5 or 6 years ago. They tried to make everything electronic, and what they found was that there were some technical problems with that, especially in more rural parts of the country. People still needed to have cash. So I don't know if we'll ever get us away from a system where people have physical cash. But sure.
Gotcha. Yeah, I agree with you. I don't think it's the end all be all, but it is, like I say, an interesting new addition to the monetary system. Now, I wanted to get your take on the financial outlook. I know the Russell 2000, the oil markets, the US dollar, some trends that you've been following. What is your look on a macro level at the US economy right now and the stock market, the financial markets?
Well, the economy is weakening. We're recording this today, and we had new home sales this morning, and it was a disaster. The data has been weak. The economic data has been weakening for some time now. Not egregiously, but it's been getting marginally weaker for months. And it's just an axiom that whenever the yield curve inverts, at some point you get a recession. The yield curve inverted 16 months ago. Typically, you get a recession within 18 months, so we should be having it soon. I think one of the main reasons that we haven't is because we still have a lot of stimulus money still sloshing around the economy, which is, more money chasing fewer goods, that whole thing. But I do think that you cannot eliminate the business cycle. I do think we will have a recession. Um, I have a position in 2-year notes where I'm basically betting that the Fed is going to cut rates in 2024, probably sooner than the market expects. We have about 100 basis points of rate cuts priced in as it is. I think there will be more. So, yeah, I mean, I do think the economy is going to get weaker. It's just happening very, very slowly.
Gotcha. And you would think alongside that rate reduction, they're going to fire up the money printers again, would you, Jared?
I tend to doubt it. I mean, we're still doing quantitative tightening. We're still selling bonds off the balance sheet, not very fast, but we're still doing it. I think it's possible that we could stop doing QT. I don't think we'll ever go back to QE. I don't think we'll ever do quantitative easing again, unless, and this is at some point very far off in the future, but if interest rates got to very high levels, 7, 8, 9% on 10-year notes, there will be pressure for the central bank to cap yields and basically buy an unlimited amount of bonds to cap yields at a certain price, which is debt monetization, which is what Argentina was doing. So that could happen at some point in the future, but that's too far off in the future. So
Sure. Makes sense. So with all that being said, then where do you see opportunities right now for the retail investment community?
um, there's been a lot of talk about the Magnificent Seven, the seven stocks that have outperformed the S&P, and I think we've seen signs of life in small cap. I think small caps have outperformed over the last couple of weeks. We had a couple of big days in small caps. Um, I would bet on, we've had a 20-year period of outperformance of large caps versus small caps. I would bet on that reversing. And I don't know what's going to cause it to reverse, but I'm just seeing technical signs that it's beginning to reverse. So I think small caps are good, but I'm not a big fan of US stocks at the moment. I think there's better opportunities elsewhere. We talked about Argentina. India is a great place to invest. It's really, if you think about it, among the emerging market countries, Russia is uninvestable, China is uninvestable, Brazil is a mess. Like really, like in the EM world, there's only one safe place to put your money, and that's India, and it's just going to go up based on flows. Europe, there's no growth in Europe, but there's incredible dividend opportunities. There's some dividend ETFs where you can get 8 to 10% a year in dividends in Europe. And if you get it, we've also had a long period of US versus international outperformance. If that reverses, that could be a good trade too.
Yeah, no, I like that a lot. And that was going to be my follow-up question. I know you ran the ETF division for Lehman Brothers. Would you invest it, or would you recommend exposure through ETFs to these emerging markets and overseas?
Absolutely. Yeah.
That's the way you'd
Yeah.
go, yeah? Okay.
Yeah.
As opposed to individual stock picking or trading on their exchanges?
Well, in Argentina, you should probably pick stocks. There is an ETF. It's called ARGT, but it's 45% in Mercado Libre, which is the biggest stock in Argentina. It's basically Amazon. And it's a poorly weighted ETF. It's not a good ETF. So, but yeah, for India and Europe and elsewhere in the world, the ETFs are great.
Okay, amazing. Yeah, I appreciate it. We've got a big, about 35,000 community here, retail, a lot of kind of middle-aged people in North America. So it's great to get some exposure outside. Now, I'll kick it back to you, Jared, for some closing thoughts. Again, knowing that the audience here is a little bit younger, retail community oriented, what would be some advice or closing information you'd want to share?
I guess it would be that, you know, people were max bullish on bonds when interest rates were zero, and now they're max bearish on bonds when interest rates are at 5%. Um, Usually a good thing to do is to be greedy when others are fearful, right? And a lot of people consider the bond market to be uninvestable right now. But gee whiz, you have positive real interest rates of about 2.5%. You have 4.5, 5% coupons. And not to mention, investment grade corporates, you can make 6 or 7%. High yield, you can make 8 or 9%, even in high quality stuff. So, take a look at the bond market here and make sure your asset allocation isn't totally weighted towards stocks.
Gotcha. And don't have too many kids as well, eh? No, I'm joking. Okay, well that's great. And like I say, we talk a lot about the micro caps, the Bitcoin companies, but it's really refreshing to get a macro outlook from someone like yourself who's had so much experience. As you mentioned, you've got a new book coming out. So excited to read that one, and I really appreciate your time today. We'd love to have you back and share kind of some of your expertise a few months from now as well, Jared.
Thanks. Yeah. But once again, the book is No Worries: How to Live a Stress-Free Financial Life. You can pre-order it now.
Okay, and when does it actually come out?
January 23rd.
Okay, great. Awesome. Well, yeah, we look forward to that. I know I'll be grabbing a copy. You guys, if you're still watching at this point, I really appreciate it. Hopefully you found some value. So make sure you hit the like button, subscribe to the community, give Jared a follow on social media. We'll leave those linked in the video description as well. And it was great chatting with you today, Jared.
Thank you.
All the best. We'll talk soon.